Hello and good day. This is the daily analysis of the GBPUSD currency pair for January 6th. As predicted, the price entered a bullish phase, and with closes above the swings in this section, it continued its upward trend, and finally, it collected the buy-side liquidity here and is currently consolidating in this area. The BPR has reacted in this area and is currently undergoing a short-term correction. By analyzing the RSI, we can see that it is currently in a high potential zone. It is expected that the market will have a short-term correction, and after that, it will resume its trend and continue its bullish movement up to the order block area in this section. On the 1-hour time frame, we can see that the price made a short-term correction downward to collect liquidity. It gathered liquidity on the sell side here and eventually reached the 50% zone. The ATR candle reacted, and after that, it entered a bullish phase here. There was a short-term correction, and with the price moving upward, this order block area was confirmed, which eventually, after a pullback to this order block candle, continued the trend. It continued its upward bullish movement, which notably coincided with the release of the ISM data. So, manufacturing PMI, its PMI data was released. This led to an increase in the price of GBP. Compared to USD, currently, if we look at the RSI, we can see that it is in a negative divergence, which could mean the price may continue its downward trend. And finally, it could react to this unicorn zone here. This unicorn zone is located in this area, which could allow for a correction up to this section. And we can use this opportunity to enter a sell position, set the stop loss behind the zone, and the take profit at the edge of the unicorn or at the 50% level of the unicorn. We can set it so that it gives us a risk-to-reward ratio of 1.5. However, it is predicted that if the price enters this unicorn zone and shows weakness in the trend, we can use this opportunity for a buy position inside the market during a downtrend, aiming for the swing targets in this area or the edge of the BPR. That's it. Also, with increasing momentum in the market and a close below the unicorn zone, the price could potentially move downward in the near future. And a pin bar candle has formed. Here we can look for a position in the market. If a lower swing forms and a reversal is identified in the trend, we can also enter a buy position in this area. The entry point is in this section. The stop loss is in this area to the target of the swings. Here, also, by identifying a momentum move, which is a strong and sustained price movement in one direction, and by recognizing a price pullback, meaning a temporary reversal in price within the established range, we can enter a position that forms the Ryan Soldier strategy for us, or the strategy. The swing filler pattern, which we can also use this opportunity for a position in. If momentum increases in the market and the price closes below this Fiji zone in this section, the price can continue its trend and keep moving toward its own direction until it reaches the sell side liquidity. Collect the liquidity here, and finally within this optimized daily order block zone, on the 4-hour time frame, we can look for a position within the market. By analyzing the 15-minute time frame, we see that the price has correctly formed an accumulation phase. During the London session, there was a manipulation. Here, what happened was that the buy-side liquidity was collected, and finally, during the New York session, we can look for a distribution move within it.